Hi, I want to show you a really simple way to use the Fibonacci tool during market retracements in both uptrends and downtrends. We can use it to find good entries. I'm going to show you where the sweet spot of the Fibonacci is and how to use Fibonacci to find good places to put your stop loss and also good places to put your take profit levels. And later on in the video, I'm going to go into an actual example in the charts and demonstrate this there as well. So here we have an uptrending market, right? We've got a higher high, a higher low, moving up to another higher high. And we want to get in a trade. We want to take a long. So what we do, we go to our Fibonacci tool and we go from the swing low and we pull it up to the swing high. So the 0 is at the top and the 100% level is at the bottom, and then we wait. And quite often price will come into this area, and this area here is what I call the sweet spot because it happens so often. It's such a simple thing to watch for. Big institutional players, they want a deal. They want to long the market just like retail, but they don't want to buy it here like retail often does. So they'll wait or manipulate the market down lower so then they can buy at a discount. See, this is the 50% level. That's the 0.618, the 0.709, the 0.79. So price comes down to the 0.705. So consider that a 70% discount. Just like when you're shopping, you want a deal. So this is 70% off. So guess what happens? The big players, they step in and they put their buy orders, causing the market to go up higher, right? It's that easy. It's that simple. It's what you want to look for in the charts. And in a downtrend, the same thing occurs, just in the inverse. Big players, they see the market coming down. They don't want to buy here. They don't want to buy here. They want a discount. They want to get in with their shorts at a discounted area, which, like I mentioned before, is a sweet spot right there between the 618 and the 79. Price will often react here, even in downtrends, just like it did in this uptrend. So let's go into the charts and find an example in the real markets. Hey guys, thanks for watching. Please hit the subscribe button, give us a like, and notifications as well for your next videos. So here we are in a period of the market where Ethereum was in an uptrend, and you can see the retracements as they happen. Price makes higher highs, higher lows, eventually higher highs, higher lows, higher highs. So we're in an uptrend bullish momentum, and we want to get in. We want to buy. What do? We see this swing low. We see price push up here quite aggressively, big bullish one-day candle, and we want to put buy orders. We want to get in on some of this action. So we take our fib, we go from the swing low up to the swing high, and we can anticipate that price, after it reaches this level, is going to come down somewhere in this level here, right into the sweet spot. When this price comes down to the 0.75, and like I said before, we can use the Fibonacci as well to find out where to put our stop loss. So here we are, price taps the 0.705. Price has just hit this level. We take a long. We can safely put our stop here because we're seeing price starting to react in the lower time frames, and we mark it buy even. We might even have limit orders sitting here waiting for this area to be tapped, and we want at least a 2-hour trade, right? What happens? Price comes up. That's a 4-hour trade right there. Just because we waited for this area, we waited for price while it was up here, we waited for price to come down here. And when it did, we knew what to do because it hit the sweet spot, right? So we can look for another example to the right. Swing low here, swing high here. Wait for the retrace. Where does it go? Just around the 0.79 before giant bullish engulfing candle that pushes price higher. Where should our take profit levels be as this trend goes up? How far is it going to go? Well, we can use the Fibonacci, like I mentioned before, to give us some idea of where that might occur. So you have the swing high to the swing low, and you have the same Fibonacci levels as extensions above, right? So it's the same levels, they're extended up here, and price will often interact with these levels. We can say, all right, we got in down here, we think price is going to take out this high, push up. You can look to these levels as reasonable areas where price might reach, and then watch as it goes. Or, you know, if you're just happy with picking a level, you got in here, your stop's just there below the 7.9, and you know that's a over a 3-hour trade. But you can say, all right, I think price is going to go to the 1.382, which it does in this case, and that's a 3-hour trade. This tool and this method of using the sweet spot is not foolproof. As you can see, certain times it does not retrace from the 0.79 level and continue up. It comes down lower, and in some cases it's not a retracement if it keeps going, right? Then you have a market structure shift to the downside. It could go right past your Fibonacci levels and continue down. So that's the risk you have to take, but that's why we manage our trades with just 1 hour. So thanks for watching. Hopefully this was a relatively straightforward explanation of how you can effectively use the Fibonacci tool in your trading. Give it a try, leave a comment down below, hit the like button, and subscribe if you hadn't already. There'll be more educational content coming, and thank you so much for watching. Until next time.